Welcome back, and in this video here I'm going to teach you or share with you how to trade with fluidity through price action and key levels. There's really not much else you really need to analyze the markets. If you understand how to draw these, it is very possible to become successful in trading here. So on my screen here, I'm sharing with you my prop firm challenge results. These are in a demo environment, therefore I do not know how they would respond in a live market due to liquidity and other varying factors. I'm not a financial advisor, and none of this I'm going to share with you is financial advice. This is simply for educational purposes only. Trading is risky, and most people do lose all of their capital who try to trade. The results I'm sharing with you here on my screen or anywhere online for that matter, they are not typical, they are rare. So let me get into it here. All right, you're looking at my prop firm challenge accounts here, and I'm going to share with you these here. I've been very open with these. I actually started this one back in the end of November. And to be truthful here, you're looking at my results. You can see I'm at about $105,000, give or take now. I honestly should have had this into phase two and funded and probably, well into funding and profit there. But during the month of December, I missed a lot of trades due to the holiday. And I know that sounds like an excuse, but it's the honest truth here. There were quite a few trades that I did miss due to the holidays and kids events and whatnot. But that's trading, right? And that's how it goes. So we continue on. Now, I am trading this in a very specific way, using a very rigid system or approach. But I'm going to share with you my other prop firm account, which I trade differently, which is more fluid using just price action and levels. And then I'm going to share with you how I come up with these price action levels in this particular video. So do stay tuned and continue watching here. But I want to explain here a couple of these trades. I did have a nice 3R win, literally just last night on UJ. I trade the New York Open and the Asia Open. And then on my other account, I'm pretty fluid in terms of what I trade through swing trades there and so forth. But I've been very near to moving through and on to phase two multiple times in this account, but like I said, I did miss a lot of trades last month because of the holiday. So here is my other account. This one is more fluid trading here. Now you can see, again, I have a pretty decent win rate, and you can see the varying different profits here. Again, this is another prop firm challenge account where I'm in also phase one here. Now, I do have my live account that I'm compounding. There are other videos on this channel where I do talk about that, and that is going very, very well here. I did have to switch brokers because of the whole MT4 debacle, and that really took me about a week and a half to 2 weeks over the holiday to get situated there. Then I had withdrawal fees, then I had deposit fees. So, but that is still up by about 3 times the amount I started with since I began doing that again in late November here. So overall, a pretty successful December, a slower December for me overall with the holidays and so forth. But you can see here, I am literally just taking these trades here based on price action, nothing more. There's nothing complicated. Trading doesn't have to be complicated. I think a lot of traders do overcomplicate trading, and once they look at a chart, they start adding things, and they feel like the more things they add, then the higher win rate or the higher success rate they're going to have, and that's just not true. So let me now hop over to the charts because I want to share with you how I trade this particular account you're looking at right now. And I'm very confident I'm going to move both of these on to phase two and get funded, only because I know my approach and understand how I have been trading, and I know what I am capable of here. I'm very confident in that. So let me go over now to the charts here. So this is the Euro USD that I have pulled up on the 1 hour time frame. All right. In all honesty, I could simply just remove everything off my charts, and I could just use these purple lines that you see right here. I'll move them right there. All right, these right here. These probably carry the most weight on my charts when I draw these. Now, I call these key levels. I do draw up gaps or inefficiencies. A lot of people have different names for these here. I just call them a gap or an inefficiency area, right? It's basically when there's a large move in the market and price is moving very fast, price likes to gravitate back towards these areas here. So let me go ahead and just get into it a little bit here. I do have some markings up here, and I did actually take a trade this morning. I actually had a long down here like this morning right off of this wick here. There was some news this morning around 8, just after 8:30, and I actually had a trade on right about here like this that I did take. That was my long here this morning, and the reason I took that, if you look at this here, I did have a level prior to this right in this area right here. All right, and the reason for that level was this wick here. Rejection, price came up, and I was looking for a retest of this particular area here, and we got it. Later in the day, as we approached this, what I would call a moderate level, meaning I didn't think this was going to hold because there is a gap up here, and price generally, you know, statistically speaking, price likes to gravitate up and fill these areas at some point in time. Not always, but from a probability standpoint, you know, that's what we're looking at. The challenge is there's also another large one way down here off to the left that we may also get here. So as I zoom back in on the 1 hour here, this is where I draw my levels. And if I drop down to the 1 minute, I'll remove this here real quick. I did have another trade up in this area here this morning. Let's see, right over in this area, right about here. All right, and this was really easy. Once you understand where these key levels are, then it allows you to manage risk appropriately by getting your stop up and over them and then going for 1R, 2R, 1.5R, whatever the case. In this case here, my plan was to hold it this far, but I did not in this particular case. I actually got out in about this area here because I was afraid we would pull back up here, and I didn't want that to happen here. So let me just go through now the chart, and I'm going to share with you how I find these key levels here. So what I'm going to do now is I'm going to just back up, and I'm going to go back out to the 1 hour. I love the 1 hour. That's the first step that you want to take here, and looking for these key levels is looking at the 1 hour. And then I'm literally going to remove everything off the charts so you can see them. I don't even need my alerts on here because I know where they're at and I know what I'm looking for already. So none of this is even needed. Okay, so clean, fresh charts. So from a probability, I'm going to speak in probabilities. From a probability standpoint, all right, price likes to gravitate back towards these imbalances right here, okay? These big imbalances. So in and around these imbalances, now I'm looking for wicks or areas there has been rejection in the past. So if I look at this here, this is quite easy to see. There is a rejection wick there, and I'll zoom in on it just so you can see it. All right, there's one there, and there's also one right here, okay? There's some rejection happening here, and there's also some rejection happening here, and then it's happened there. So to me, this would signify that there would be a key level somewhere in this area. This also aligns with a nice even psychological number. So that is one key level there. Now these happen also on a lower or a shorter time frame, I should say, meaning when I'm looking at the markets at 9 a.m. New York Eastern Standard Time, I'm zooming in and I'm looking for specific key levels here. So let me give you another good example here. All right, let me actually come back to a day. We're going to come back over here to, we'll just draw up like this here. And again, I'm doing this video with no editing, completely unscripted. So you're going to hear all my ums, and you're going to watch me on the charts here and go through this, but you're going to get exactly what I am sharing with you and all the mistakes and whatnot. So there we go. All right, let's go over here now to 9. So if I'm looking in this specific area right here, if this is my trading session, right, in this area, this is what I'm looking for. I'm looking for these rejections right here. Can you see one here? Rejection here. There's a rejection here. All right. So on this particular day, I might have a key level in that area. So if I were zoomed in right here trading during this time period, all right, I'd be looking for price to come up into this area somewhere in here to have a reaction down. So what I'd like to do is find my key levels for price going up and price going down. And let me show you another example, and then we'll zoom in here. Let's go back and look here. All right, this is a really simple one. And this happens over and over every single day. All right, let's just do, I want to bar replay this just so it's cleaner so you can see that there. All right. So on this particular day, the way I trade, I'm looking at the New York Open, and I start at 9 a.m. So this is the 7 a.m. candle. This is the 12. That's when I stop trading. So when I'm looking at this 1 hour chart right here, all right, I am making myself aware of these specific key levels in what may or may not happen. Okay, I'm looking for my gaps. I'm looking for my highs. So over here, I may say, well, there is a high, a possible high here. This is a really strong candle coming up. This looks like it has a lot of momentum. And we've already tested here, so I don't know if this is necessarily going to hold, if there's a key level there. So I don't even start trading until, let's see what time that is. That's 7. All right, and that is 8. So I'm not even interested. So 9 is when I start. So now that we're here, now that we're in this area right here, all right, can you see this? Let me remove this real quick. So if there was a high here and it's broken, and we had this rejection right here. Do you see this rejection? All right, and do you see this right here? Price is broken through. So I might move this down. Do you see that wick right there? Right there, and I know that there's a gap right here. This would be a gap down here. So I would have a key level right there. Okay, look at this. Look at this, rejection right there, rejection here. All right, what was resistance is now support. Okay, we're through here, so there's a possibility which was resistance could now be support. All right, so let me just get that out of there, and then we'll drop down on the lower time frames here. We'll come down to the 5-minute. Might be a bit easier to see. So here's my session when it ends. Starts at 9. Well, it starts at 10 actually. Goes 2 hours right here. So I'm looking for, so now that we have a key level down here, because of this rejection right here, all right, do you see it right there? And because of that wick there, prior to my trading session, all right, I'm looking for price to come down here and have some kind of reaction, a potential reaction off that level. But I'm also aware of this gap that price may want to try to navigate into that. So here goes price now as we're coming forward. All right, look, there's a level. Look at that reaction right off of it. Now it's outside of my trading time, my trading window. But as we came down, we had a reaction right here, right at 10:10 a.m. during my trading session. There was a reaction right in this area. Now I have other confluences that I do use at times when I get into these areas, but to be quite honest with you, they're not always needed. Trading with fluid, or trading from a fluid standpoint, meaning I'm just looking at price action here, I could have easily taken a position right in this area, right here. And from a management standpoint, maybe I want to get my stop down below this gap here. I don't like to take an 18 pip stop, generally about a 15, and going for a 1-to-1 is about what I trade. That would have gotten it. Well, let's just play it forward and see what would happen as well. All right, and this here, I think it does go up, and right there, that would be, if I was going for a 1.5, that would be totally fine. But what gives this away here, what gives this whole area as a key level away when I get to my chair in the morning or get to my desktop is this right here. This rejection right there. This tells me there's a high level of interest in this area, and then we're also protected by this gap. So if I can get my stop below that gap, and if there's a reaction right in here, there's a wick that proves it out. Looking left, there's also this rejection here. So this tells me that this is probably going to be a good area right here. And that's it. Trading really can be this easy as drawing up various price levels. And this is what I do. And this is how I go into my, if you look at my my accounts I just shared with you, this is how I get win rates like this and trade like this, because I am looking for those specific price action levels or key levels. And it is, it's how I'm doing it. So I don't have a whole lot more other to say than that. Other than that, trading can be this simple. Look at price action. I do have a free Telegram group. It's in the description below, and I do some morning market analysis there. If you want to check that out, you're more than welcome to join. So once again, thanks for watching, and yeah, we'll go on to the next video here. Take care.